Welcome back to another episode of Rawstocks. This is Rustic. Today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow and into the rest of the week. Before we get started, don't forget to check out the description below. We got a link to the new Rawstocks website, www.rawstocksllc.com. Go ahead and check it out. It has all the information on how to join the Discord, how to become a premium member, and how to start taking advantage of the Rawstocks callouts. First thing we're going to do today is we're going to take a look at some of the call out trades, the entries that we took and where we exited, and then we'll go into the higher time frame analysis. So let's go ahead and check out the chart. Today, if we look at the entry points, right, we had that pre-market kind of faded, right? If we look at like the London Open pre-market, you saw we just kind of faded. And then we opened up with just a massive sell-off, right? So the very first trade that we took today was at 9:35, so 5 minutes in, right? 1, 2, 3, 4, 5. We're down here, right? Saw the RSI headed down, saw us starting to set up divergence. Might have been a little bit of a jump on the entry, but definitely with that quick sell-off during the silver bullet, was looking for some kind of rebound. Okay, so we took the 175 call here, took 5 contracts, buy to open, called it out 5 minutes into the trading session. Okay, then we went up with this move here. Contracts were up $100. We came back down a little bit. Right, and then I saw this fair value gap here. We added 5 additional contracts. Right, so then we were at 10 contracts total at a $3.11 average, and that was right at 10 o'clock. So that was as we dipped back down into that fair value gap. Okay, right here's 10 o'clock. So that was that drawdown into the fair value gap. Right, we drew just a little bit further down with one more candle, and then we went pushing up. Okay, we pushed up. We took our first exit right here, literally 4 minutes later, right? We trimmed 5 positions. And then, 27. So no, that was a little bit later. Sorry. We saw the push up here, came up, took that, right? Here's our estimated take profit, but I saw that top, and then I saw us draw back down, and I saw us come out and run the stops of that top, right? So that's where we trimmed 5. Then if we look further into the callouts, we added some additional contracts as we drew back down, and then we popped up and we closed all of the trades, right? That was at 11:26. So we'll go look for 11:26. As we drew back down, we wrote it back up, right? We added 2 and we closed back around the same level. And so we ended up taking about $1,000 profit total between all of those positions, closed out entirely. We came back down, we took another trade, we got stopped out for break even. And then we took one more trade. Let me see if I can find the time. So 2:21. In the afternoon, we took one more trade, and let's find where that was. If we look for 2:21, that was this move down here, right? Faded down a little bit, ended up closing it as we pushed up for another $160. So all in all, we closed about $1,200 in callouts. We had the one break even, and we had the other 3 go for nice profits. So like I said, about $1,100 in callouts, all for the premium section, all for $25 a month. So let's take off some of these indicators now, and then let's go ahead and look at some of the high time frame stuff that's going on. So we're going to look at the daily chart. We pop over into the daily chart. You see we got this order block up here, but it's pretty far away, so we're not too worried about it. It's up at 250. And what we want to notice is that today was a doji candle, right? Basically similar, equal wicks, not quite, but pretty similar. Doji day on an inside day compared to last Thursday, right? So we had an inside day Friday. Now we had an inside day doji on candle of indecision, right? Today. So we are respecting this triangle that is formed off of that rip up. Right, that rip up from earnings and that nice explosive move that we had that nearly took us to 200. and then we've popped back down, and we continue to kind of have this triangle pennant pattern forming from that earnings breakout, right? So we're starting to approach the apex as we're kind of coiling tighter and tighter inside of this triangle, right? We also know that we're finding support around this 173 level. You can see we've come down 1, 2, 3, 4, 5, 6, 7, basically 7 candles since mid-May, all down in this 173 area. Now, what it really seems like is that smart money is building their position for the next ride up, right? In this 175, maybe we could even call it 178 to 173 range. It looks like every time we get there, we see a pretty nice big move. We aggressively dropped down last Thursday. We popped up pretty tight. We came back down, wicked it today, right? And popped up again. So as long as we continue to respect this trend line, we might wick down below it, right? And I'd be looking for us to pop back up. We have the 50 and the 20, and we're at the 50. We're above the 20 period on the daily chart. We have RSI fairly neutralized. So if we can stay above the 50 and 20, we want to get the 20 to cross the 50, right? And we can make a push on the 100 period again. That's up at 186.37. Okay, we do have high gamma readings at 185. The highest of the week is back up at 185. So kind of expecting that we're going to see maybe a push up over the next couple days. Okay, above that, we have the 200 period that's coming in around 200. So if we break out of that, we might find a rejection. Let's draw this with our path tool, okay? And this is purely hypothetical, but if it happens and we break out of that, we'll probably find rejection at the 100 period, drop back down to test that broken trend line, and then see us push up to take the buy side liquidity that's in this wick, right? And that would line us up with that declining 200 period. Now at that point, we'll see the 50 and 20 start to move up. We might see a back test of the 100 period, right? And then push up and hopefully break the 200. But that's neither here nor there. First, we need to break out of this resistance trend line, right? And then potentially backtest it. Maybe not. We could just shred right through it, but potentially backtest it and then make a run on that 200 level. It's entirely possible. We're building a lot of energy as we consolidate. We've spent a lot of time in this area as well. I'm sure if you look at a volume profile, you can see, kind of in this 170 to 180 range. We've spent a lot of time here. So it looks like that's a pretty nice area of support, and we want to see that held to make a run higher. Let's drop to the 4-hour chart. 4-hour chart's going to show us that same triangle or wedging type of pattern or apex that we're approaching, right? That we showed you on the daily chart. Now here we have it again on the 4-hour chart. It's not here because we dipped into it with a wick, but we have a nice fair value gap that we're sitting on. Right, we set it last week on Friday. We've now popped back down to draw on the liquidity, run the stops that are sitting below here in these wicks, right? And then we want to see us pop up. Now we're above the 100 period. We're below the 20, 50, and 200. So we definitely want to see this pop back up so that we can continue higher on the 4-hour time frame. So it's a little bit on a neutral side. We're slightly below the 50, below the moving average on the RSI on the 4-hour, right? But we're still above the 100 period, and that can continue to offer support, and that's right below the support level of the trend line, right? So even if we pop back down, we want to see this fair value gap hold, okay? Because it hasn't been closed. We just wicked through it. Want to see this fair value gap hold and then see us make a run. We also have a bearish fair value gap here that has also not been closed. So we're a little bit, and I'll show you what that looks like. We're a little bit in between two fair value gaps right here, just kind of sandwiched. So you can see there's a lot of back and forth, similar to our triangle pattern, similar to our consolidation ranges, right? We also are now sandwiched between two fair value gaps. So which one's going to win, right? We pop back up, we rejected, right? We drew back down. So far we've rejected. So which one wins? We'll continue to watch to find out. We should see this play out in the next couple days, if not tomorrow. Drop down into the 1-hour chart. Right, still got our trend lines here. See that we pop back down on the 1-hour chart. We have a order block, right? It is a swing order block, and then we saw it set here, and you can see we continue to draw back down to that same level inside of that order block, right? Here on the 1-hour chart, we're above the trend line. We're below the moving averages. We have RSI fairly neutralized, right? So maybe we pop back down just a little bit, but looking for that push up on that on that resistance line to see if that continues to hold as resistance or if we can break out. If we can break out, we'll back test and then run higher, right? But on the moving averages, we're below all of them right now. We did get above them on Friday, then we popped below, we wicked above today, right? And then we are currently setting below. Right? But we can continue to walk this line up. We don't have to run up and pop up, and it doesn't have to be aggressive. We can kind of pop up, back down, and then shoot out of it. Right? There's a lot of different ways this can play out. Here in these little purple boxes that you can barely see, this is the new week opening gap. Right? So if we get above that new week opening gap, we could expect a push, and then maybe even back down to test the new week opening gap. Right? Now, if we fade it back into the order block, we'll expect that price will pop back up to the new week opening gap, right? So just another tool that we can use when we're watching what price is saying. Last thing we'll do is look at the 15-minute chart. 15-minute chart just gives us a little bit closer look without digging in too deep. You can see we got an order block at 186, and we got the order block that's holding here at 137, right? Similar to the 1 hour. We got a 15-minute order block within that same area. You can see we popped down, we popped up, we tested this one. We're sandwiched between these two order blocks. This is our support and resistance, okay? Every time we're down here is a good opportunity to buy. Every time we're up here, 186, is a good opportunity to sell. So if we see another pop up to that 186, right, we might look to sell or trim our positions. I know on the callouts, we got some July, August, and September calls, 200 calls that we're writing. If we see that move up to 186, there'll be a nice profit. We can start to trim that position, right? Then look for the pullback, re-enter, and then look for it to move up higher. Now on the 15-minute, we're also below all the moving averages. Also on the RSI, we're neutralized. So you can see a lot of our RSIs on a lot of our different time frames are fairly neutralized. All right, so really just looking for that support level to hold, to see us move up, take some of the liquidity up here, break out of the resistance, move forward. Bear case scenario, we fade the support line, right? We pop up. If that support line becomes resistance, then we'll drop down further. We'll be looking for a move down to 171, 170, and some change, potentially as low as 168.90, and then 167.55. So you got your different levels low. High, we're looking for 183.25, 186, 187.02. 187.65, and beyond that, we'll be looking for a move to 198 and to 254 cents. So hopefully this analysis has been helpful for you guys. Don't forget, again, check out the description below. We got a link to the brand new Rawstocks trading Discord, the trading website, where you can find more information about the Discord, how to become a premium member. If you like this content, if you found the analysis to be helpful, please consider liking the video, sharing with your friends, subscribing to the channel if you're not already subscribed. And hope you guys, again, have found this helpful. I appreciate all the support, and we'll see y'all on the next one.